Hello and welcome. If we are salaried, we know we pay income tax on our salary. And if we are self-employed, that is, if we are into business or profession, then we pay income tax on the profits that we earn. That said, what if self-employed persons have an option to pay income tax not on profits but on half their income? The next question to your mind would be, how many would make 50% profit margin? Agree, not many, especially if you are into business where usually a profit margin of 20 to 25% is considered as gold standard. But if you are a professional, say a lawyer or a doctor, or you are into any other specified profession, then you are likely to have a higher profit margin because your brain is the primary asset for you. We'll shortly understand what are these specified professions. Probably keeping all these things in mind, our legislature has introduced a concept called presumptive taxation scheme under the Income Tax Act. Today, let's talk about one such scheme for professionals. We'll understand what's the scheme, who can opt for it, and what are the things to consider before opting for it. Normally, we pay income tax on the profits that we earn. So, profit is equal to income as reduced by expense. But certain specified persons like professionals or freelancers can opt for altogether a different taxation scheme where profit would be equal to the 50% of total gross receipts from profession for the year and no other expenses can be claimed. This is known as presumptive taxation scheme under section 44 ADA of Income Tax Act. The objective of this scheme is to provide relief to small taxpayers. Next, let's see who can opt for it. Lawyers, doctors, engineers and technical consultants, movie artists, architects and interior designers, accountants and company secretaries, authorized representatives, and information technology professionals. Let's now understand a bit more about this presumptive taxation scheme. We know that professionals or freelancers or consultants can opt for this scheme. We also know that deemed profit would be 50% of total gross receipts. Further, only resident persons are eligible to opt for this scheme. In other words, non-residents are kept out of this scheme. And these resident persons can either be individuals or partnership forms. Not even LLPs are covered, that is limited liability partnerships are also out of this. Even companies, associations cannot opt for presumptive taxation scheme. And individuals and partnership firms can opt for this presumptive taxation scheme under section 44 ADA only when their total gross receipts from profession for the year is up to 50 lakh. That is, it is less than or equal to 50 lakh. If you satisfy all these conditions, then you will be able to opt for presumptive taxation scheme, in which case you are not required to maintain books of account and no audit would be required for you. We have so far understood that 50% of gross receipts would be regarded as profit. What if your profits are more than 50%? Or what if it is less than 50%? Let's start with the first situation, that is you have higher profits. Higher profits means it is more than the deemed profit, which is 50%. Let's say you have 60% profit. If so, you can declare profit and pay income tax accordingly. No questions asked. Next situation is when you have lower profits. That is when your profits are less than 50%. Even in this situation, you can declare and pay income tax accordingly on whatever profits that you actually make. But you are required to maintain books of account. Further, income tax audit would be applicable to you. That is, the books have to be audited by an authorized person. As of now, only chartered accountants are authorized to do this. But if this declared income is less than the basic exemption limit would be 2.5 lakh. In that situation, no need to maintain books of account and no audit would be applicable to you. Now we have reached almost the end of the video. Before we wrap up, let's quickly see what 5 things you have to consider before opting for this presumptive taxation scheme. First, total gross receipts. If your gross receipts from profession for the year is more than 50 lakh, then you will not be able to opt for presumptive taxation scheme under section 44 ADA. Second factor would be profit margin. If your profit margin is more than 50%, say it is 60% or 70%, then it's better to opt for 44 ADA. However, you may still declare higher profits. But if your profit margin is low, say it is 20% or 30%, then it is better to avoid this scheme, because even though your profits are less, you have to pay tax on minimum profit of 50%. This profit margin analysis, you may do this for every year and choose to opt in or opt out for the particular year. Next factor to consider would be advance tax. If you have opted for 44 ADA, then advance tax can be paid by 15th of March. If not opted for it, then advance tax has to be paid every quarter to avoid interest liability. Fourth factor would be books of account and audit. If opted for 44 ADA, then you don't have to maintain books of account and no audit would be applicable unless you declare lower profits. Fifth, income tax return. If you are a salaried person, then you would be using form ITR1 to file your income tax return. In addition to salary income, let's say you are into freelancing, then you would be using form ITR3 to file your income tax return. But if you opt for presumptive taxation scheme under section 44 ADA, then you have to use ITR4 to file your income tax return. That's all I have for you in this video. Hope this was helpful. If you have enjoyed this episode, you may like and share the video. Thank you for watching.